What's up, guys? Whiteboard Podcasts. This week we're talking to Brett Fulmer. He's a friend. He's Broker Brett. We're going to talk about the state of the industry when it comes to insurance as well as InsurTech. So let's get to it. Brett Fulmer. What's up, dude?
How you doing, John?
Good,
Been a
man.
while.
It's been a while. You look good, man. How's everything going for you?
I got a little workout regimen going. Got my little smartwatch. Been running quite a bit during COVID.
Oh, nice, man.
What have you
been doing?
Just 3 miles a day. Sometimes a freaking slow old man, 15-minute miles. Today, I think I clocked in at like 9:20.
Hey,
just running
there
around
you
the
go,
back
dude.
bay.
Yeah, don't trivialize that. 3 miles a day is sweet. As long as you're getting out there, getting your heart rate up, that's important.
It's perfect. You just find 1 hour,
Yeah.
And it's just like, it's not too much. And then it's also like, you don't really have an excuse,
Sure.
So,
yeah. Did you start this as soon as the lockdown happened?
pretty much. I honestly think I've missed probably 4 or 5 days since the start of it. Just literally to get outside and see other people, kind of like medicine.
Sure.
And then June 1st, a friend threw out a challenge to run every day till July 4th, and I just haven't missed a day since. I was like, why stop?
That's so
just
cool,
keep it
man.
going.
Good for you, man. There's really no reason to stop. It's so healthy to just get out there and, be in the fresh air and get your heart going.
Well, with what we're doing too, dude, especially trying to like relaunch my own little brokerage and everything, I feel like it's sort of getting ready for war, and I've been adding like push-ups and kettlebell in there too,
Nice.
just kind of priming the machine, and I do feel 15 to 20% more productive. I won't say it's like night and day, but a little more focused.
15, 20% substantial if you have that over time.
Yeah. No,
That's
I'll take
awesome.
it. Yeah. No, it's been helpful.
Absolutely.
Yeah.
So you and I met, let's maybe back up a little bit. A few years ago, we were looking to add to our team. I really liked you. You're very entrepreneurial.
I appreciate it, dude. Yeah.
You were invested in the InsurTech area, and you had your I don't want to say tentacles. That's a weird thing to say, but yeah, you're spread out in a lot of different areas, and I was really impressed by that. And obviously, you decided to pave your own path, which is thank God for people like you doing that. That's awesome. I have a lot of respect for entrepreneurs. So can you talk to me about what that journey's been like over the past few years? Since we met.
Yeah, 100%. And I appreciate you hanging out with us at Broker Brews, and you guys have always had just a badass shop and a machine rolling down at Whiteboard. You guys know what you're doing from the ground up. So my background's always been sales, copiers for a year, 6 years of office relocations, kind of grew up around that company. When it was obvious my dad wasn't going to buy it, I jumped into insurance because it just looked way better. Office moves, home moves have a ton of paperwork, but you only get paid once, and you got to chase down clients to pay, and you're managing crews. So when I saw the annuity side of insurance, I was in. At that time, I had a personal lines job that kind of gave me some reps, and then I could network into commercial. And John was trying to pull me out and say, hey, man, let's teach you some workers' comp. Let's teach you some bigger things. Regretfully got stuck there for a little bit. Some sales jobs after that, and then decided to do my own thing a couple years ago. And then cut my teeth on P&C at a buddy's benefits brokerage for a little bit. Now peeled back to my own brokerage with a buddy. But, it's a journey. It's not up until the right in this, entrepreneur small business thing. You'll have your grind, and I appreciate you, being encouraging the whole way through, man. Even when we didn't get a chance to work together, I appreciate you staying in touch.
Dude, absolutely. Yeah, up and to the right doesn't happen. But it'd be boring if it was that way, man.
Yeah, right.
You got to have those lows. You got to have, taking a couple steps back and reassessing and reevaluating where you want to go.
Gives texture to the game.
Yeah, exactly.
So it's a record, it's not an MP3.
Yeah. So talk to me about so you were working with I forget his name. I apologize. At the health insurance brokerage.
Yeah, with Blake over at Maxwell.
Exactly. So you were working with Blake, and then you've gone into your own thing in the past couple of years. Is this where your heart's at? Is you want to do your own thing and keep that going?
Well, it's kind of about independence, autonomy, being one of the dudes sort of helping, or ladies, 2020, run things. So when I decided to go independent after a couple of goofy sales jobs, I actually hooked up with a startup out of Toronto that's coming to the States. And I've got them licensed in every state but Massachusetts, just super cool guys. So I was splitting my time between that and then helping at a benefits agency to get more commercial insurance reps. Did that for about a year and a half and change. Still work with Blake for any benefits clients, but that just gave me a good opportunity to get my hands on some commercial paperwork.
Sure.
And then I always kind of had the shingle in the background, Newport Beach Insurance Center when I was trying to do my own thing. I have a buddy, Ed, who lost a job 2 years ago. He's 57 now, was 55 then, never been unemployed in his life. And he worked for like a micromanager for like 9 months, but wasn't a fit. And, between his organizational chops, know how to hire, fire, run a profitable business, me with all my crazy ass ideas and, ability to sell and service, it was a nice, kind of melding, and he's got the operational kind of knowledge, and I get to bring whatever ideas I want, whatever crazy harebrained plans I have, startups I meet. Sometimes we get a yay, sometimes it's not yet,
Sure.
Let's get our bases covered.
That's awesome.
But
That's
it's
a
nice
great fit.
little tandem. Yeah, exactly.
That's super cool. Yeah. You do have a lot of ideas, man. That's one of the best things about you.
I appreciate that.
So you were really heavy into InsurTech, and I'm sure you got your finger on that pulse as well. Yeah. That's something that we have a ton of different resources at Whiteboard, but we haven't been invested. We've never gone to like Las Vegas to go to any of the conferences. We're using Indio, and Dallas could probably speak better to what exactly we're doing on the InsurTech side of stuff. But, where do you see this industry going from the independent side? And do you see it moving away from the independent side, which is one of our fears? I don't think it is either, but
we'll do more with less, and people still want some consultation. These things are complicated. I have a friend out of Canada that thinks anything below 1,200 commercial, 400 personal should be automated. Mm-hmm. But you start going north of that, people are going to want to talk to a human. I think we're going to be able to do more with less, which is cool. I think we're going to become more like what we think of as marketing reps, kind of getting people aware of the risk, sharing knowledge, and less paper pushers. Sure. One of the startups I'm advising is out of Denver called Juniper Labs. They do an awesome job just pulling publicly available data, helping you figure out, workers' comp class codes, everything else, and just typing it in the back end of certain startups to where, we just need 3 pieces of data and we can buy in business. We're just going to move quicker, and it's going to be less looking for a fire hydrant and more, coffees and beers,
Yeah, that's awesome.
Yeah, so I don't think we're going anywhere. Fineo, what they're doing is putting, multiple products on one platform. So a fact finder for financial needs and, term, whole life, critical illness, disability, all in one workflow. Things like that. So we're not in 20 to 30 tabs in our browser. We're using a cover wallet for small business and, manage everything, in one place.
For sure.
That's where I see it going. Yeah.
That's really cool. What kind of disruption would you see on the independent agent side? Because I could definitely see, you said 1,200 for commercial. I could see on the health side of things, this getting a little out of control in regards to just automation. And I do think that there's a lot of value for health insurance brokers, but since Zenefits came out, that kind of shook some stuff up in a pretty radical way, and there's a lot of other companies following suit. Like I could see the health insurance stuff going away relatively quickly if it's not, unless independent agents can figure out a way to harness that technology and still provide that customer service, which I think is the move. But
the tech is like the table stakes now. Like Blake will offer ease. There'll be a few other things that are just they're table stakes even for small business today. What I think is super interesting, everyone's sort of freaking out about government healthcare and everything else, but I have friends in Canada who do benefits, and it's almost like Medicare here, where like Medicare will cover kind of A, B, but then there's all these other services, there's all these elective things, there's these other routes, so it becomes like an add-on instead of like a baseline.
Sure.
That's the big change I see on that side. But the tech is kind of table stakes now, and not cheap, not overly expensive, but anybody really can get access for their clients these days for HRIS systems and all that.
Yeah.
Super
but
cool. You do need that to stay in the game. It's the days of kind of the country club benefits broker that just knows a guy, that's kind of mellowing out. But same thing with the dude who doesn't offer upside. For anything above small business as a commercial broker. I know you guys go in there with all sorts of services and help them out with their workers' comp.
Yeah.
If you're going to compete in that big small business middle market, you got to be able to provide value.
Yeah, 100%, man. This is a relatively archaic industry. I mean, we say it all the time, is you're getting a lot of these shops that are either getting sold to Gallagher, Acrisure, Marsh, all those folks. And if they're not selling, they're still not changing. And they're still, I don't know, the majority of shops out there are still operating the same way as they were 20 years ago.
Yeah. Which, that's great for us, I think.
Definitely great. The opportunities.
That big small business, dude. Candidly, I'm in like micro business right now. I'm helping out these little one-off things like
Sure.
a flight school out of Texas that doesn't have a plane yet. My friend's startups that are 1 or 2 people. So I'm working really small, but I think that like 0 to 200 employee space is going to be right for the picking for a very long time.
Yeah, I think so too. It happens with a ton of brokerages. As soon as they sell to, and I'll use Gallagher right now, like their whole workflows change. Clients are getting passed around to other account reps. And so like the quality of service they get down from like a boutique agency down and then up to like a Gallagher is like a dramatic reduction. And I don't understand how Gallagher and those folks are paying such a high multiple for these books either. It doesn't make any sense. Like you're going to have massive attrition because you guys are unwilling to like retain the reason why that these clients went with, you know, the smaller brokerage to begin with. Which again is a great thing.
You know, if we can get our bones up as a shop, maybe helping these older dudes exit in a way that's friendly to them, you know, keep the name of the business there, let them hang out a little longer, you know, not make it, you have to show up 9 to 5 for 2 years, you know, do X, Y, and Z. I'm thinking there'll be an opportunity if you're willing to hang in the smaller space to kind of help people exit gracefully.
Acrisure does that. I don't know if you know. Yeah, Acrisure is there.
Check them out.
Yeah, their model, I think they're like the 7th or 8th largest insurance brokerage right now. They're just essentially a private equity group. And so what they do is they allow you to keep your name. They keep you on for a few years for that transition over there. And they let you run your agency the way that you've always run it. And they just provide you access to their services, which is in regards to just an M&A company, like they're running it the best. And I could see that, cool. Like, if they continue down that model, they're going to be hyper successful. Because there's a lot of folks looking to get out of the, like, turning 60, 65, and ready to retire. And so if they don't have a succession plan in place, like Acrisure and all those big companies wave a fat check in front of them.
Yeah. No, it's cool. And you got to let people, I'll say, retire with dignity. I totally get why small business owners love hanging around their shops, too, and why it's hard to send them out the door. Like, they're masters of the universe there. You know, they have their own little world, kind of operates on their terms. Like, I totally get it. The guys at the moving company were in their 70s, you know, when I was working there, and, you know, they have their routine, you know? Yeah. I'm not mad at them.
Yeah, 100%, man. You got to keep going. What else are you going to do? A lot of these folks don't have, like, a plan after they retire.
Right.
Most folks look at retirement. I'm going to go sit on a beach somewhere, drink some margaritas. Like, all right, you can do that for 2 weeks, tops. Where else are you going after that?
Well, especially if you build something, you usually have that innate drive. Like my dad right now, like he got furloughed from CB. He was like a year away from retiring anyways and retired. I'm like, this guy's too wired. This guy's not going to be able to hang him up.
Yeah.
You know? So it'll be interesting to see what he does. But yeah, that's part of the plan. And then for me, just programmatic opportunities too, you know, seeing where I can embed some insurance, you know, kind of API driven stuff that's on off automatically. You know, I think the on-off insurance is kind of a fad and just turns into expensive insurance.
Sure.
But if you can have some data-driven projects, I think that's going to be super interesting the next couple of years. I think you're going to go from thinking about a brick and mortar to using the brick and mortar as like a flagship, and then digital distribution, digital enablement. Yeah, and there may be a slight fewer of us, but we'll just reach out further. Sure. You know. So
actually, I have to have a conversation with you about a project offline. Dallas is working on something in regards to like surrogacy agencies.
Yep.
Yeah. So remind me after we get offline to talk to you about that. It's going to be a good one.
That's cool.
Yeah.
Yeah. And then I have like a plan in the back of my mind I'll run by you too that I kind of see as a future.
I know. I would like to prick it. We need to go to lunch or something at some point and actually sit down because you do have a lot of ideas, and I do think that would be a good place to mine and potentially, you know, do some stuff together.
Yeah, 100%. Yeah, I was going to say, there's nothing's gold. Still got pulling the work, but I think there's a few outsized opportunities. So for me, I try to split my time between like being in the paperwork, knowing my accords, knowing my policy form as best I can, and then running around with the insurtechs, because I think being a better, you know, boots on the ground agent is going to help me better with the tech, and being better with the tech is going to enable me with different opportunities as an agent. You know, that's kind of how my logic sort of develops.
That makes a ton of sense. Yeah. Where, I guess over the next 5 years, where do you see your brokerage going?
So I'm lucky that Ed knows I love working with startups. So, you know, we're 50-50, but he's ops. He's checking out the bank account. He's making sure everything's in order. So I can kind of dabble and make these friendships. And what's cool is there's 2 insurtechs that we were the first agents literally on their platform. So it is providing us some upside. So I'm not just kind of getting distracted and playing around in a way that's not beneficial to the company. But, I trust him. The guy's 57. He jokes, he's like, I'm old enough to be your dad. Like
Sure.
I give respect to a grown man who's run companies before. I still got a lot to learn in terms of just healthy small business. So 5 years, ideally, we have a large central hub with a few nodes, maybe working off a comparable brand. That's kind of what I was alluding to. And we're running a healthy business that we can maybe home grow some tech, or we can help other tech sort of level up. So we're almost like a agency consulting firm combined in one, that maybe has some startup projects they're nurturing,
That's really cool.
Yeah.
You're planting seeds right now, man. I love it.
Right?
Yeah. You just got to make sure you're appropriately watering those, spend time where you need
exactly.
to.
Yeah.
That's a good space to be in. This is an old industry. And so if you are fostering, 5, 10, 15 different relationships that, one of those pops, you're in a pretty sweet spot.
What you guys should do too, what I do a little bit, is I have friends I call like the young guns, like the InsurTech young guns, and
Sure.
they're all like 30 or younger. They're just strong agents throughout the country, and we'll just kind of touch base on different things.
Yeah.
So just helping those guys get access to stuff, whatever, helping them around. So you're almost like planting seeds of like future leaders you might be able to work with.
That's a great idea.
Yeah.
Yeah, we need to get plugged in, man. We are notoriously bad at getting involved into anything. Like for any of the insurance agency stuff, we don't get involved in.
You're kicking ass though. You're running a business. You're grinding. Like you have your metrics. You know what you're doing, and there's a ton of respect for that.
We're doing
you guys
one thing. Yeah, go ahead.
Put in what you put out.
Yeah.
Yeah, and I respect the crap out of that. That's what it's all about, man. The people who aren't active on social media are usually busy making money.
Exactly.
Yeah.
Hey, you hear that, Tyler? Yeah, that's why we don't do it. That is one of the things that we are solely focused on, building our product that actually provides real value to our clients with the problem that we've built our platform to solve. And we're just focusing entirely on that. And so we're probably missing some stuff in regards to opportunities that you're going to be getting into, and we should take more of a more attention to that.
Double down on your strengths, though. I mean, I almost realize I'm as much a media and a marketing person as I am an insurance person. And that kind of tripped me out to think about. And I just got to figure out how to monetize it, because even my dad's friends did like a kind of a mellow retirement party for him and played golf, and there's like 10 heavy hitters from commercial real estate, and like, how you doing? I see all your stuff on LinkedIn. I see what you're up to. How's everything going? But I haven't got any business from them yet, personal or commercial. So I got to figure out how to get that presence flipped into.
But they're seeing you.
Opportunity. Yeah.
That's
so the word's out. Yeah.
That's super cool. It is very difficult to try to figure out how to monetize that kind of attention, right? Without
in a way
that saying, "Hey, I'd like to make some money from this."
But you also have to do it too. Push comes to shove. You get in the red zone. You kind of have to twist an arm sometimes, get a deal done, and
absolutely
ask for the business.
And that's okay if you feel like you're competent and going to do a good job. Like you have some semblance of authority to say, "Hey, like I am going to do a good job for you. This is a good place for you." It's a smart 100%. Business decision to actually work together.
100%. And for myself, been around a good amount of life insurance now. Have good GAs I can go to. Sold personal lines for a year. Made 70 to 110 cold calls a day. Sold $20,000 to $40,000 of personal lines a month. Commercial was at Blake's for a year and a half. Have really good GAs, really good resources. So I got reason to be confident. I'm not over my skis yet. I mean, I'm not like, I don't have a lot of hubris. I kind of tend to downplay everything. So I'm not like super bullish yet, but I got reason to put my nose into different lines of business and go get some activity.
Sure. Absolutely.
Yeah.
As long as you're feeling comfortable. Yeah. What lines on the commercial side do you feel not comfortable with?
Your workers' comp game. I know you guys handle it like champs and you're savvy. I mean, I feel like I'm operating workers' comp at such a 1.0 level. You know, like it's just straight lined. I know you guys are.
Well, you're in the majority. I mean, that's what everybody does. Work comp is relatively benign when it comes to the coverage, right? Unless, like, do you have it? You do? Okay, cool. Here's your price for it. And so, like,
I think it's cool though.
Yeah, there's a lot of. I mean, there's a lot.
To your own horn a little bit, dude. You guys know what you're doing there. Like, that's big time, and that's one of the biggest checks that goes out of any company.
I appreciate that, Brett. That's awesome, man. I appreciate you saying that. That's so, like, the coverage side on work comp, very, very benign, really easy. The claim side, and this is for most different types of insurance, like the agents don't get involved to the claim side very much at all. And because this one is so hyper variable when it comes to the work comp, like if you leave it up to the insurance company, they just don't handle it correctly. And I don't know if we're going to do this on like the auto or the E&O or the D&O, anything like that, because a lot of agencies, especially larger ones, will have claims advocates. These claims advocates just aren't on, one line of business. They're going to handle, an auto claim, a cyber liability claim. And they're more monitoring the claim as opposed to like proactively managing them. And I do see, because, man, brokers make a ton of money for the amount of work that goes into what they do, right? 10 to 20% of the insurance premiums every single year goes to your insurance broker. Because of that, like you should expect a little bit more depending on like what your broker's actually doing. Then here's your policy, here's your certificates. If you have any questions, give me a call. Because it's the annual, like it's
or even just sandwiches and golf.
Yeah.
Proactive. Help the business.
Absolutely.
Yeah. But it is amazing how much those sandwiches and golf can kind of anchor clients. Sometimes
they do.
It's hard to rip somebody away from their buddy.
Yeah, exactly. No, Tommy brought in donuts for the whole crew next week, so we're gonna stay with them. Yeah. That's awesome.
And leave $500,000 on the table.
Yeah. It's crazy, man. Blake's company, the health insurance company, agency. How long have they been around?
So he's been in the space for, I want to say, like 7 years. He's been in insurance for 10. I think he'd be at like 3.5, 4 years now. Okay. Yeah. He does a great job in what he does.
Briefly touched on it. Are you worried about any, or is he worried about any like government intervention? I know Gavin Newsom was really pushing for the single payer out here.
He was, and then he spoke to Donald. He's one of the co-founders of Teneo, who still has somebody managing it, but has a really robust benefits brokerage in Western Canada. Speaking to somebody who's making a ton of money off benefits in Canada, would kind of put Blake at ease a little bit.
Sure.
That even if the government gets heavily involved, there's ways to make money on it.
Yeah. Is that just off the ancillary services, like on top of like the baseline? That's
an HSA account. That's the big one. Was like and that's how you get employees. It's a big hook at tech companies. Any good company is going to have a big HSA spend too.
Yeah. Yeah, that makes sense, dude. Folks aren't using HSAs a bunch. It is remarkable. People are still using FSAs. I want to look into it more. Yeah, they're a phenomenal tool. I think they're the best health insurance tool. Besides, have you heard of the difference card?
No.
Okay, essentially what it is let's say you have a group of 200 and you're on a guaranteed cost, and you sponsor a Gold Kaiser HMO plan. So everybody's just co-payment is $10 to go in an office visit, something like that. Typically, you're only getting about 5% of your population using 95% of the benefit. And so what the difference card does is essentially functioning kind of like an HSA, but it's a employer-funded card that allows you to take your sponsor plan from a gold down to a bronze, get the premium savings, but don't take away the benefit from your employees. Cool. It's really, really neat. So it's not like really a tech thing at all. It's just how you're structuring it differently. So I see that kind of stuff like being extremely valuable, but not many people are using it. I think there's a ton of health insurance companies or agencies that are just kind of sitting on it. They talk to the HR director like, all right, messing with people's benefits causes issues. You don't want to change anything. Like you guys have a great solid plan here. Yeah. You're going to take your standard 12% increase every single year and they just eat it and it sucks. And so we are actively trying to crack the nut on the health insurance side, like we've done on the work comp side. And we think that's going to be one of our tools.
Yeah, totally. I think in any of these lines of business, there's, I'll call it 10 to 30% savings if you're creative, or if you really kind of dig down into it and you don't just take a first pass. Yeah. What the standard or what, it just seems like there's opportunity.
You hit it on the head, man. Creativity, like we have that in one of our videos we put out and we firmly believe it. I think creativity is a cornerstone of risk management.
There's transparency too, and kind of understanding your client and what risk they're willing to take on, if they're willing to be self-insured for X, Y, and Z, because they might not even know that's an option,
Yeah.
So it's cool.
For sure.
You guys do anything creative on like captive side or anything like that? I don't want to weave into things too deeply.
Yeah, no. Yeah. We're looking into it. We've looked into it for 4 years. And so we're actively looking to start our own PEO.
Yeah. Oh, very cool. Yeah.
Captives for work comp here are very complicated.
Mm-hmm.
The reinsurance is just a nightmare. And depending on like what kind of deductible you're looking at, like you're very limited on what you can write. PEOs, on the other hand, really do open up the underwriting guidelines.
That's cool. Yeah. That's interesting.
So that's the next iteration of what we're doing.
I always feel like, and not picking on them, I haven't successfully been able to work with PEOs yet, but you feel like they're in a different world than us, kind of, and they're playing a different game. But I feel like if you guys can sort of bridge over understanding how brokers work, understanding our mindset, understanding traditional insurance sales,
sure,
yeah, you'll be able to kind of network into that all day long.
I mean, a lot of PEOs, and this is actually how I cut my teeth back in when I was working in Chicago, is I would take folks out of are you familiar with what the assigned risk pool is?
Yep, to a degree. I mean, I've been to my fair share of little coffee mixer things.
Okay, so essentially most states that are operating with an NCCI as opposed to WCRB have what's called an assigned risk pool. Mm-hmm. And in order to get into the assigned risk pool, you have to show that you can't get insurance anywhere else. You don't want to be in the assigned risk pool either. It's like it's the worst place that you can be in regards to your workers' compensation. And so the way you get in there is you have a high mod, you've had a ton of losses, and so it automatically hits you with their high X mod, and they have an ARAP factor that multiplies your premiums by 25% on top of that. And so it is always hyper exaggerated when it comes to your premium. So all I was doing is I was taking folks out of the assigned risk pool and putting them with PEOs, which works really, really well. So and this is how we describe PEOs right now, as a Band-Aid solution to the actual problem. You have a claims, data, and injury issue. And because of that, you guys have a high X mod. And so what we can do is help rehabilitate your X mod by our system and then put a Band-Aid over it by partnering you with a good PEO that won't take into account the same way a guaranteed cost would your experience mod. But they're good tools, but just used incorrectly, which a lot of them do, is like you pay exaggerated rates for your payroll, for their administration costs, like all that kind of stuff. So once your mod becomes more healthy, PEOs become very uncompetitive.
Yeah, it's interesting because we were able to break down a couple PEOs and kind of pull clients out, and that makes sense to me. You go to them when things aren't ideal, and even my simplistic broker view is, people who have really bad risk mods will just maybe hook them up with a PEO.
Yep.
So, it makes sense.
Well, that's right.
You're saying, they live there. Yeah. And no one's ever going to tell you, hey, you should be paying less. So you get into a PO on one set of terms because X, Y, and Z is going on in the company. No one's ever like, hey, you're doing better now. You should jump out of it.
Yeah,
they're
exactly.
not going to shoot themselves in the foot,
Yeah, 100%.
You have to get guys like us to show up and check out the paperwork,
Yeah. So that's the route we want to go. We have I'm not going to disclose this on air, but we have a very unique way that we're looking at the PEO space, and we think we can actually do some damage in that area.
You guys have always had cool programmatic ideas. I mean, even since we talked back in the day, like I know you guys are always like chewing on big things, but I also appreciate that the blocking and tackling it takes to run a profitable insurance agency. Yeah. You know your numbers, your metrics. Yeah.
Yeah. Shout out to Jimmy and Dallas for that. They know what's going on. Yeah. So just like you have that, like our version of what's your partner's name?
Ed. Yeah.
Ed. Our version of Ed is Dallas. He's running the show, and he's crucial to our success because it would be one of those things that he's got the operation side down, and so from that perspective,
you guys had it down.
Yeah, very, very thankful.
Yeah, even for my brief visit, I could tell you guys just had like a well-rounded kind of three-headed monster, and then just building up the team. There's already like a good little heartbeat to that place like 2 or 3 years ago. Whenever I came through.
Yeah, 100%, man.
Cool.
Super cool. All right, well, Brett, we got to do this again, man. I really appreciate the time. Do you have any other questions? Do you have anything you want to go over? Anything you didn't miss?
No, I mean, even just funny, our brief conversation about work comp is helpful, and kind of a couple extra layers on the PEO thought. But we'll do an unofficial one of these, and we'll do another official one before too long.
Hell yeah, dude. Thank you for the time, Brett. I really appreciate it, man. I'll see you soon, bud.
Of course.
All right.
Thanks, Sean. Sounds good.
Later, pal.